Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring. Today is Sunday, May 22nd, 2022, and I appreciate you coming here for my weekend update review of the trades of last week and the possible new entries for setups for this week. So hope you're doing well out there. Hope you're having a nice weekend. I usually record these on Friday night or Saturday. Had some problems with my trading, not my trading platform, but my charting platform. And the prices did not update correctly. So I am going to be using TradingView today. I had to go in and duplicate the trades, kind of transcribe the trades on this new charting platform. Hopefully I can get it worked out tomorrow, but this will work in a pinch. But thank you for coming. Hope you're doing well. Like I said, hope you had a nice weekend. Hope you're looking forward to this week. You know, the market has been atrocious, obviously, right? We've been down 8 straight weeks. Something that hasn't happened, I just read, since 1923. I mean, what is that? That's like 99 years since this has happened. So I hope you're staying safe. I hope you're keeping your head up. Swing trading has been very difficult. No doubt about it. But things will turn. One day they will turn. You know, we had a nice reversal low, or a reversal off the lows on Friday on the indexes and most stocks. And, you know, hopefully we'll carry that through. Actually, I say hope, but we are right now. The futures as of Sunday night up nice and strong, you know, in this market. We know that that can evaporate quickly, but be nice if we could hold on and get some of these swing trades to work. You know, I mentioned this last week, but you know, I trade monthly bars, I trade weekly bars, I trade daily bars. In the last 8 weeks, nothing has worked. I mean, obviously, right, with this down market, it's a little frustrating, but you know, I like to trade as many different time frames as possible, and thank goodness for day trading. My trading partner, Ava, at Presence Trades, over on Twitter. We've had a fantastic month. We've had a record month in day trading, which I'm so grateful for. And it just kind of goes to show you that the reason I trade so many different time frames is that it's very rare that 0 time frames work. And who knows, in the future, the monthly trades, weekly trades, daily swing trades may start taking off and doing well. Maybe the day trades don't. Who knows? It'd be nice if they all got in sync together. I don't know. But just a good example of trading multiple time frames, and if one doesn't, or if the multiple ones don't, then one of them does, and that's what has happened. So really trying to keep positive, trying to focus on the positive, and the positive is that it's been a record day trading month for us. So that's something, right? So, all right, here's what we are going to do today in this podcast. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions, talk about when I bought them, why I bought them, and how I am going to manage them moving forward. Have some trades on the dailies and the weeklies, nothing on the monthlies. So we'll go through all of that. After that, we're going to talk a little bit about trader psychology, most important skill in trading, and it is a skill. It's a skill. You know, we all have emotions. We're human. We have emotions, and the key is not to not have emotions, but the key is not to act on the emotions. The key is not to revenge trade. The key is not to trade out of frustration or anger. You know, my trading partner, Ava, is just a master at this, just the presence of mind and the discipline that she has. I'm impressed on a daily basis. So please go and follow Ava at Presence Trades over on Twitter. You'll be glad you did. She has great content. So, all right. So after trading psychology, we're going to touch base with Frank, and we're going to take a look at some of Frank's Frank poem from this week regarding the market. Always like to do that. Always kind of fun. He has such a gift for writing those. After that, I have gone down through my watch list, and I have marked some potentials for next week. You know, usually when I do this podcast, price has to move higher or generally lower, has to move above a level to the upside, has to move below or reject a level to the downside, come back up. That's how I trade. So I have marked, I've had a good handful of them, actually more than that. So we'll go through those, and we'll take a look and see if there's some potential interests for some trades for me for next week. All right. So that's the plan. Review the current trades, talk about trader psychology, review one of Frank's poems, and then potential setups for next week. All right, so before we get started, I'm going to run the U.S. legal disclaimer. I'll be back in 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All righty. Well, let's get going. Let's see. All right. Well, let's get started. First trade, current trade, I did take this on Friday afternoon. I actually took it after the close, after I had time to kind of take a look at things, take a look at the positions that I already had, how they were doing. Didn't quite notice this one, but I did like it after hours. So I did buy Apple. I did buy Apple on Friday after the market closed. Looks like I bought it here 137.59, so I bought right at exactly where the market closed, 137.59. I bought it because two confluences. We had an intraday under 30 RSI, close back over. We also had a rejection of the negative third ATR channel. The key trigger here is the under 30 over 30. The cherry on top, which makes the trade better, is the rejection of the negative third ATR channel. Over time, about 92% of prices stop going down when they get to the negative third ATR channel, go sideways, or bounce up, which is, of course, is what I am looking for. So we had a nice intraday rejection on Apple. We don't get a lot of 30 RSI intraday rejections on Apple, but we had one. And to boot, and cherry on top, we had a rejection of the negative third ATR channel. So because the entry signal was an under 30 over 30, you can see right now, you're going to have to look over here on this particular chart. But the RSI is 33.11 during the day. We went underneath. We broke the 30 handle on the RSI, closed back above. That's my main trigger. That's the main reason I got in. But the accompanying supporting action is the rejection of the third ATR channel. So whenever I buy anything, when I first see a setup, I look for the setup. Of course, the setup here was the intraday rejection of the 30 RSI, the bounce of the negative third ATR channel. So those are the signals. When I buy, I take, good rule of thumb, 1% of your capital. So if you have $100,000, 1% of your capital is $1,000. If you have $50,000, 1% of your capital is $500. If you have $25,000, 1% is $250. So I take, good rule of thumb, 1%. I take less, right? Because I trade large accounts and I risk about 0.5%. But a good rule of thumb is 1%. So 1% of your total capital, I divide it by the value of the 2 ATR. Now I know this trading platform or the charting platform is different than I usually use, but what do? On this particular chart, I have, if you look over here, bottom left-hand corner, 1 ATR is 6.42. So I use a 2 ATR to position size. So I position size 6.42, times that by 2, whatever that number is, I divide it by my maximum allowed loss. That tells me how many shares to buy. So then I know how many shares to buy. I buy, red line down here, emergency stop, which is 2 ATRs away from my entry. My end of day stop is just close below the 30 RSI, right? Because that's why I entered under 30, over 30. If I had to close below the 30, that would be my end of day stop. But I always have an emergency stop in case things go really, really sideways. And if it gets down to that emergency stop, which is exactly 2 ATRs below my entry point, then I will lose 1% if that's what I'm risking on a particular trade. So that's how I position size. That's how I place my stops. I always have an emergency stop. I always have an end of day stop. And so that's what's going on right now. And so I'm exactly even on the trade. Futures are up, so that looks like it could be a good start for Apple tomorrow. Berkshire Hathaway. All right, I did buy Berkshire Hathaway back here on the 13th of May. I bought Berkshire Hathaway with an under 30, over 30, same as I just showed you on Apple. So when I bought this trade, take my maximum allowed loss divided by the value of the 2 ATR, enter the trade, place my emergency stop, which is 2 ATRs below, and then where is my end of day stop? Well, the reason I got into the trade was an under 30, over 30. Currently, we are at 30.92 because of the nice reversal that we had on Friday. So it's still holding my end of day stop. So I have the emergency stop down here, have the end of day stop down here. This trade is down. This trade is down 1.84% so far on the trade, but has not triggered my emergency stop or my end of day stop. So I continue to be long on Berkshire. Netflix. All right, here we go. Netflix also bought with a under 30, over 30 RSI. Day before it was 26.39, rallied, closed at 32.89. Placed my emergency stop. Where's my end of day stop? Closed below the 30 RSI. This is very close to being even. It's 35.97 RSI. I bought at, what was that, 186.35. It's let's see, is that 186.35? Sorry, not used to these new charts, but yeah, I guess, well, let me double check because I want to make sure. 186.71. 186.71, it's 186.35. Yeah, so this one is down 0.5% right now. Had my emergency stop down here. If it closes below 30 RSI, I am out of there. SO. All right, now this one's going to be a little tricky, everyone, because I couldn't duplicate on TradingView what I have on my Trade Navigator charts. I bought this because of a 520 crossover. I could put the 520 crossover on here, but for some reason it wasn't giving me the same readings as on my chart, so I'm going to go off my charts. I bought when the 5 EMA crossed over the 20 EMA. And I place my position size, I place my emergency stop down here, and then I have my end of day stop. My end of day stop is when the 5 EMA crosses below the 20 EMA. It has not done that yet, so I am still in the trade. The SO trade, I'm down 1.59%. All right, these were all weekly trades. So anyway, this is the first week that I wasn't just in the trade and out of the trade, in the trade, out of the trade. So just to wrap up the daily, bought Apple under 30, over 30 RSI. That trade is exactly even. BRKB also bought an under 30, over 30 RSI. That trade is down 1.84%. Netflix, under 30, over 30. That is down 0.5%. And then SO, bought the 520 crossover, but it's not showing on here. I really apologize, but I just couldn't get it accurate, so I decided just to take it off. This one bought at 74.60. It's 73.41. This one's down 1.59%. Now let's switch over to the weekly. If we go over to the weekly, I did buy last week at Friday, the week before on Friday, with an under 30, over 30 on the weekly. Bought this at 177.82 because of the rejection of the 200-day moving average here. Now, again, on my charts, it closed above the 200. On the TradingView charts, because it's slightly different setup and settings, it closed below. But so if I was going off of the TradingView charts, I would have gotten out of the trade with a close below. But on my charts, it closed above, so I'm keeping it. So I did buy IWM 177.82. It is currently 176.08, down 1.01%. And then Nike, also bought Nike on the weekly with an intrabar under 30, over 30 in rejection of the negative third ATR channel. Basically the same setup as Apple has. Next week went down, reversed back up. Friday I had to get out of Nike because it closed at 28.14, which is below 30 RSI. So bought that at 114.90, got out here at 108.35. for a loss of 5.32%. So still a lot of losses there. Glad to see the futures up. Hopefully we have a good week, but this is the frustrating part of trading. The pluses and minuses of the trading, for me at least, swing trades lately, have been that I've had a lot of losses, but the losses have been small because I have position size correctly. And that's the key. It really is the key. You have to position size based upon the current market volatility of the market. When the market volatility is high, the 2 ATR reading is going to be a larger number. Dividing that into your maximum allowed loss is going to be smaller position size. So, still in here trying to make money, even with this down move. Hasn't happened on the swing trades, unfortunately, but the losses from the swing trades have been pretty minimal, and that's really all you can ask for in a historic market like this. But I've been doing this for over 25 years. The markets go up and down. They are up and down. They don't just go one way. If you go day by day, it feels like it, doesn't it? But I promise you, you look into the future, you will see eventually some kind of rally, and that's what I'm trying to get. They say don't try to bottom pick. Well, I agree. If you don't have a plan, if there's no real entry signal, but you can see each one of these triggers that I've had, each one of these trades that I've had has had a legitimate entry trigger that gives me a structure to plan my trade around, give me levels to plan my trade around. And if I'm wrong, most of the time I'm wrong pretty small, right? I did hit a couple emergency stops in the last month or so, but in a market like this, it's to be expected. All right, so that is it as far as the current trades. Apple up 0.09%, BRKB down 1.84%, Netflix down 0.5%, SO currently down 1.59%, IWM down 1.01%, but I still have all these trades. The only one I closed out was the weekly trade on Nike for a loss of 5.34%. All right, so now let's check in. Let's go over here, talk a little bit about trading psychology. This is from Trading Composure over on Twitter. Such a great channel, everyone. He's at Trading Composure. Do yourself a real favor. Follow him on Twitter. It doesn't cost any money. He has great pertinent trades about trading, the markets, most importantly, trading psychology. And let's see what he has to say. Those that stay in the game and survive the longest reap the rewards. Over time, knowledge increases. Number 2, self-control gets more fine-tuned. Number 3, the chance of being at the right place and time increases. Number 4, the law of large numbers gets to work its magic. And number 5, capital compounds. Okay, now what are these? Well, those that stay in the game and survive the longest reap the rewards. So over time, knowledge increases, self-control gets more fine-tuned, the chances of being at the right place and time increases, the law of large numbers works its magic, and number 5, capital compounds. So all of these benefits come from staying in the game. And how do you stay in the game? You stay in the game by position sizing correctly, knowing your emergency stop is, knowing where your end of day stops are, and getting out. All traders, the best traders in the world, go through drawdowns. It's just something that happens in trading. We're so used to the market just going up, 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 and now we're just going down like crazy. But there'll be a time where we go up. But the key is, and the key to this saying is that you have to stay in the game, because if you go in, don't position size correctly, press your foot to the pedal on the throttle, meaning you buy tons of positions, huge positions, and you run into a historic market like this, you can wipe out your entire account and then you are done. The only way to get good at something is to do it day after day after day after year after year after decade. And then all the things that Trading Composure talked about here, knowledge increases, self-control, the chance of being in the right place, the law of large numbers, capital compounds, all these things will come to you if you can stick around. But the only way you can stick around is not blowing up your account. Does it make sense? If you wanted to learn to be a good guitar player and 3 days after you start playing guitar, you break your guitar in half on your fireplace, well, good luck becoming a guitar player because you don't have a guitar anymore. Well, in trading, it's the same thing. If you get frustrated, revenge trade, don't position size correctly, eventually you're going to run into this, and eventually it's going to wipe you out, which is sad by itself, but it's really sad that now you don't have any money to stay in the game and trade with. If you want to get good at something, you have to do it over and over and over. And to do it over and over, you have to stay in the game. And in trading, to stay in the game, you have to keep your money. So please listen to what I'm saying. Position size correctly based upon the volatility. Place your emergency stops. Place your end of day stops. If they hit, get out. Just get out. Be done with it. Wait for another signal to come. Trust me, it will. You don't have to catch the very, very bottom. There's tons of meat in the middle, right? So I've said this for years in my live podcast. To be the best at something, you need repetition. To get repetition, you have to stay in the game and do it time and time again. And in trading, if you get frustrated, angry at the market, revenge trade, don't take your stops, you're going to blow up your account one day. That's all there is to it. And then you're not going to get the experience you need. So thank you so much for Trading Composure. I think this is a perfect time for this post. And again, please follow Trading Composure at Trading Composure over on Twitter. All right. So before we start looking at potential setups for this coming week, as always, I want to read my poem from Frank. You can follow Frank at FrankOD over on Twitter. Today's market poem: inflation is the cruelest tax. No rest for the weary as it weighs on our back. Stocks struggle, derailed and off track. Earnings brings headlines that are hard to unpack. Trading takes commitment. It's not just the knack. Yeah, perfect. Not just the knack. Inflation is the cruelest tax. It is a tax, and we have a lot of it right now. No rest for the weary as it weighs on our backs. Yes. No bounce in 8 weeks. I would say we're all a little weary of the market going down. Stock struggle, derailed and off track. I would definitely say they are derailed and off track at the moment. Earnings bring headlines that are hard to unpack. You know, what do we have? Like monkeypox now? And who knows? Inflation, Federal Reserve stuff, conflict with Russia and Ukraine, earnings not being so great, market going down. I mean, it's like a perfect storm. But you know, my trading partner, Ava, said, you know, I'm grateful that I'm alive in trading during this time because I think we all kind of know it's historic. And she is a pro champion of pros. She has the right attitude. She gets out. She's patient. She does everything. I mean, we should all model our trading over Ava. And I'm very, very lucky to have her as my trading partner. So thank you, Ava. Appreciate it. Trading takes commitment. It's not the next. It is a commitment, everybody. It just does not have to do with pressing the buy and sell button. I've said this before, but it has to do with so many things outside of trading. Getting a good night's sleep, getting good rest, practicing meditation, presence work, eating well, getting yourself in a good mindset. It's a lot easier to follow your rules and your process in trading if your mind's in the right place. And if you have a bad day trading, that's not going to put your mind in the right place. But the rest, doing some healthy things, hiking, the meditation work, review, processing of what you did, those are helpful that hopefully you'll have a better trading day the next day. So please follow Frank at FrankOD over on Twitter. Thank you, Frank. All right. Now, let's go. This is back to TradingView. Here we go. Weekly picks. Here we go. All right. So I have quite a few of them. These are the weekly picks on the daily. Now, these are just something that I'm interested in looking at. A lot of these are not ready to go yet. They either have to go higher or lower, but this is why I do this on the weekend. Let's take a look at Boeing. Well, Boeing's kind of interesting. Look what happened here. And I hope you can see this. It's weird for me because I'm not a real expert with this trading platform, but I'm trying my best here. Boeing right now just bounced at the negative third ATR channel. Is that good? That's good, right? 92% of prices stop going down, tend to go sideways or reverse back up. So big picture, a rejection of the negative third ATR channel is good. Now, I'm not going to take a trade based just upon a rejection of the negative third ATR channel. It's helpful. It does help your chances with a trade, but you need a valid signal. Valid signal for me would be a close over 30 RSI. Right now, Boeing, you have to look over here to the bottom left. The RSI is 28.22, so it's not above 30 RSI. So on one hand, on the bright side, we are underneath, or we did reject the third ATR, negative third ATR channel, which is fantastic big picture, but I need a close back over the 30 RSI. And right now it's 28.22. So this is a potential for me this week if we can close back over 30 RSI. Now, in this podcast, I go through and I tell you the basics of what I'm looking for, but I do have a YouTube channel. I have a playlist in there called Lessons Playlist, and they're free. Go there, take a look. There's one called my 7 different type of trade setups. If you want a little more information of how I look at these setups and the trades that I take, go there, listen. They're totally free. There's another really good one, V1s, V2s, in that playlist, which a lot of people have watched, and it's a big part of my trading. Please watch that one. That will give you a little bit more insight and more details in how I trade. Alternatively, and I'll mention this at the end of the podcast, but I do teach private one-on-one lessons in the evening time via Skype. It's a 15-hour course. It costs $1,750, but it is a wonderful course. I've taught people from all over the world. Had so many good reviews and feedback from my students. And I teach you step by step exactly how I trade. There's nothing that you have to, predict. I'll teach you step by step, color by numbers, exactly how I trade. So if you're interested, just send me an email. Email's in the link of this, the description of this video. So that's Boeing. Potential at under 30, over 30. It's currently under 30 at 28.22. So that is a potential for next week. BITO, which is the Bitcoin ETF. Currently, we are at 32.87. So we did go under 30, over 30. It's in a legitimate trade position right now. I only take one trade per day. That's why I took Apple. I liked Apple better than this, but I will be watching this next week to see if we can go under 30, back over 30 again. Be nice if we're over this negative third ATR channel, so we use that as support. So right now, 32.87 already has gone under 30, over 30, but if we get another under 30, over 30, and ideally if we reject the negative third ATR channel, I would be interested there. CCL, which is Carnival Cruise Lines. Well, this is also another valid signal. It didn't quite reject, but it held the low, so it's still within this range, and it is currently a 30.63 RSI. We were under 30. Now we've closed back over. This would have been a complete legitimate entry trade for me on Friday, but then again, I liked Apple better. Why did I like Apple better? Well, it was very similar to this, but Apple did reject the negative third ATR channel, and it did reject the 30 RSI. Carnival did not. It got close, but it did not. But it did hold this previous low here. So next week, if we get another under 30, over 30 on Carnival, I'll be interested in that. DIA, which is a Dow Jones Industrial ETF, did have a nice under 30, over 30, and bounce at the negative third ATR channel. So I'm kind of hopeful with this market here that we had this big flush. We moved down. Buyers came in. Options expiration was on Friday. So this gives me some hope, at least for a short-term bottom. But you can see the RSI on Dow, 33.95. We did go under the 30 RSI, close back over. Next week, if we do go down again, an under 30, over 30, again, I would definitely be interested in catching an index with an under 30, over 30. Walt Disney at 30.68. It was lower. It closed back over. I like that a lot. MACD is positive, which is really, really good. So for next week for Disney, if we had another under 30, over 30, that would be of interest to me. Gold. Well, gold did close over the 200 and the 250. It rejected it twice. Friday, it rejected both of them, closed above. Thursday, it rejected them, closed above, which is really good. Looks like MACD is getting close to turning green here. Again, did not take this, would have been legitimate here, but I decided to take Apple as well. But this coming week, if it does reject the negative 30, if it does reject the 200 or the 250 again, interesting to me. If it rejects the 300 to the downside, interesting to me. So no interest heading up. It would have to reject the 200, reject the 250, or reject the 300 for me to be interested in. Google. Well, looks like Google did go under 30, over 30, along with the other great big monster stocks. It went under 30, over 30. It closed at 35.54, making this a legitimate entry. But again, I bought Apple. So next week, I will be looking for Google with another under 30, over 30. Qs, which is the NASDAQ 100, also went under 30, over 30. Also undercut this low back here on May 12th. Really like this as well. This coming week, if we go under 30, over 30, interested in Qs. SPY, sound like a broken record here. Sorry, but under 30, over 30. For SPY, again, I'd be looking for a under 30, over 30 the coming week. Tesla also really like this setup. Was tempted to take this, but with Apple, I decided to go with Apple. But again, this is legitimate. Intraday under 30, over 30, and rejected the negative third ATR channel. Let's see what happens this week. If I get another intraday rejection of the 30 or a close under back over the 30, I'm definitely interested in Tesla. Sound like a broken record here, everyone. Apologize for that, but these were the ones that stuck out to me. XLF, which is the financial ETF, also went under 30, over 30. So coming week, if I get another under 30, over 30, be interested in that. XLRE, I don't believe this went under. Yeah, it did go under 30, over 30, but it's the same as everything else, everyone. It's right down here in the low 30s. It's 35.83 with the futures being up. If we're up tomorrow, it will head up. Then it won't be of any interest to me. But if it does go under 30, over 30 again, and if we can reject that negative third ATR channel, I would like that even better. And then lastly, XLV. XLV, a little different one here. It's a little stronger than the rest of the market. Here's the orange line is a 300-day moving average. Now, if I could get back over that 300-day moving average, not too far extended, not too chasey, but just a nice gentle close above the 300-day moving average. Great spot to buy for me. Gives me a good risk to reward ratio. MACD did turn positive, so that's something positive. Not a lot of stocks with positive MACD out there. So this coming week, especially Monday, I will be looking to see if we can close over the 300. If it closes above the 300, not too far, be interested in buying it. If we head back down, we have another under 30, over 30, then I would be interested in buying it as well. So Boeing, looking for a close over the 30 RSI. BITO, another under 30, over 30 is what I'd be looking for. CCL, looking for another under 30, over 30. DIA, which is diamonds, looking for another under 30, over 30. Disney, looking for another under 30, over 30. Gold, want to see another intraday rejection or close under back over the 200, 250, or actually here also the 300-day moving average. Google, looking for another under 30, over 30. Qs, under 30, over 30. SPY, under 30, over 30 RSI. Tesla, under 30, over 30. XLF, and under 30, over 30. XLE, under 30, over 30. Under 30, over 30, and XLV looking for a close above the 300. Now, with the futures up, a lot of on this watch list of what I'm looking for are probably going to trigger like Boeing, XLV, possibly Disney. Who knows? But again, I like to take only one trade per day. If I buy 5 and the next day it's up huge, yeah, of course, I'm really happy. But if I buy 5 and the next day they all come slamming back down, especially in this crazy market, not going to be too happy with that. I have found over the years, one trade per day is perfect for me and my trading psychology. If they keep going up, then I add more, I add more, I add more, I add more. But if they keep going down, then I'm back to flat or just small positions. So it's something I just wanted to share with you. So I hope we have a good trading week this week, everyone. And like I mentioned a little bit earlier, I do teach private one-on-one lessons in the evening time via Skype. I teach a great course. It's 15 hours total, 5 sessions. Each session is 3 hours. I teach you all 5 of the different trade setups that I use. I teach you step by step everything about position sizing, emergency stops, end of day stops, profit targets, intraday profit targets, overhead resistance levels, trailing stops, everything. And like I said, I've taught people from all over the world. I know they're very happy that they took the course. It does cost $1,750, but it's worth every penny. So if you are interested, all you have to do is send me an email. I'll reply to the email, say, hey, great that you're potentially interested. Let's set up a Skype call. The Skype call is free. It's not a sales call. I promise you that. I just want to learn more about you, your trading challenges, your goals, and it's a great time on that Skype call for you to ask any questions of me about the course that I teach. And when we're done with the course, the call, you just think about it as long as you want. I won't reach back out to you. I promise. I told you it's not a sales call. It's just a get to know you call. But if and when in the future you are ready and you decide, hey, today's the day, I really do want to learn this from Greg, just send me an email again. Say, Greg, I'm ready to go. We'll set it up. And I promise you it's going to be a good time. You're going to learn a lot. And we'll get to be friends, which is great. I was friends with all of my students over the years. I love it. I really, really do. And I do have time now. I've cleared through my course workload with my students. So just send me an email. It's in the description of this video, and we'll get a Skype call set up. Secondly, if you like online courses, I have a wonderful online course over on udemy.com. The link is in the description of this YouTube video. I teach you step-by-step how to trade the deep dip buy stock trading strategy, which is what's happening right now. It's a perfect time to learn that strategy. The course only costs $15 on Udemy, but don't let the low price scare you or concern you, because it's worth a lot more than that, because you get 9.5 hours of video, you get 26 videos total, 15 study guides. It's a wonderful course, everyone. Do yourself a favor, watch it. You are going to learn a lot. And then lastly, if you like today's podcast or any of the podcasts in the future, I would really appreciate it if you could hit the thumbs up button. You know, it lets YouTube know that there's some content here that's valuable, and then YouTube gets out and shares it. And there are a lot of people, I'm telling you, there are a lot of people that need a little bit of a helping hand right now. I'm sure a lot of them don't know about position sizing based upon volatility, and volatility is huge right now. So you have to adjust your position size accordingly. I hope you understand that. If there's anything in this course or what I talked about today, if you have any questions, just leave them in the comments. I'll do my very best to get to them. I've been super busy trading, but I like to get back to my listeners with their questions. So feel free to ask any questions in the comments below, and I'll do my best at the end of the day to get everything done and answered for you. Okay, so if you could leave a thumbs up, appreciate that. Share on social media, that would be great as well. But I just really appreciate you being here. I hope you have a good upcoming week. I hope we all have a good trading week. I hope we have a little reprieve in the market where we can go up a little bit. It would be nice, right? Are we not do that a little bit? You know, I say that facetiously because, you know, I'm a price action trader and you have to trade with the price. I could still hope, right? After this long, I hope. So we'll see what happens, but have a good rest of your weekend. Have a good upcoming week. Please try to go out and do something nice for someone today. It really would make the world a better place. It would make the world a better place times 2 if you could also go out and do something nice for an animal. Humans appreciate an act of kindness. Animals appreciate an act of kindness. And maybe one day when you need it, someone will be there for you. But why not take the first step? And I think it would make the world a better place. All right. So appreciate you being here. Appreciate you investing your time. Hope it's helping. Hopefully next week when we get together, we all had really nice big up weeks, but we shall see. Maybe, maybe not. If not, we just have to keep going with our process, position size correctly, take those stops, keep yourself in the game like I talked about in trader psychology, and eventually this thing will turn. All right, so on the way out here, I have to run the U.S. legal disclaimer. Thanks so much for coming, and we'll talk to you next week, everyone. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.